looking forward, what do you think, you mentioned this a little bit earlier, but what do you think might be some of the motivations behind buying? Do we want to dive a little bit more into some of those motivations? Certainly diversification is one of them. But from a growth standpoint and looking forward to, how might an acquisition really supplement organic growth?
Market diversification is probably going to be one of the biggest factors. I mean, if somebody's very heavily concentrated in healthcare right now, they might want to move into another market or move upstream outside of just collections into revenue cycle management. If somebody is heavily concentrated in credit card right now and they're feeling the pinch of declining placement volumes, they may want to start to diversify into student loans, auto, other types of debt that are being provided by the same client base. So in other words, they already have a relationship there that they might be able to leverage into another asset class. I mean, that's not the easiest thing to do, but it's certainly viable. And then you mentioned commercial earlier. Commercial is actually counter-cyclical to consumer collections in a lot of cases, depending on what kind of commercial that you're pursuing. So that can be a great complement for people who are very consumer intensive. And it also doesn't require as much in terms of staff.
A lot of diversification that we're seeing doesn't require the business to really go far from the types of clients that they're servicing. They might be servicing banks currently and handling bank card, credit card, to move into auto, to move into mortgage, to move into these market segments might make a lot of sense for them. It's diversification within an asset class also. We're seeing that as well.
Financial and strategic buyers who are seeking to establish a platform in the ARM industry will be looking at larger companies. Generally speaking, north of 15 to 20 million in fee revenue with some form of recurring capability or sustainability or a combination of the two. So Department of Ed contract players, larger players in the healthcare space, larger players in the credit card space who have been able to prove their competitive advantages and differentiations,
Right.
They will still be attractive targets for those kind of buyers.
I think as we end this conversation, one of the things that I would emphasize are the distinguishing characteristics of these companies. If you line them up next to each other, what would segment one from the other? One key word that we're seeing in the marketplace that we really haven't seen in the marketplace across all of these companies historically over the last couple of years is sustainability. Sustainability of top line and bottom line performance. We think that that is really an essential component to driving value in these businesses and really driving the interest level of a variety of different kinds of buyers. The other components, very important as well. Clearly, one other point that I would like to emphasize is concentration risk. To the extent that they have one client that really generates the vast majority of revenue and or profitability, and they're not always the same as a percentage, as we all know, that will impact the interest and also the deal structure that's placed on the buyers on these types of transactions.
And one thing to add to that list is obviously management bench strength. I mean, you've got to have the people in place who know how to run this business and they're willing to stick around post-transaction, because if those people are not locked in to supporting the buyer's needs, valuations will reflect that.
I think we see more and more today that companies have made the capital expenditures necessary to really position their business both today and for a going forward basis, especially in the markets that they service in bank card, credit card. They almost have no choice.
Well, and you're also alluding to things like regulatory compliance needs, data security needs. I mean, now it's no longer a competitive advantage to have that capability. It's a cost of doing business, and you have to know that if you're going to enter those markets.